The digital marketplace ledger. What is an order book? An order book is a fundamental tool in cryptocurrency trading. It serves as a real-time ledger that records all buy and sell orders for a particular asset. It is an electronic list showing all current buy and sell orders for a specific asset, like Bitcoin paired with the US dollar. This list is continuously updated to reflect the latest market conditions. The order book exists on a cryptocurrency exchange, providing a transparent view of market interest. It allows traders to see the depth of the market and the volume of trades at different price levels. Constantly updated in real time, it reflects the ever-changing market. This real-time data is crucial for traders who need to make quick decisions. The primary purpose of an order book is to facilitate fair trading by matching buyers with sellers. This ensures that trades are executed efficiently and at market-driven prices. This transparency is a cornerstone of open markets where prices emerge from the collective actions of participants. It helps maintain trust and integrity in the trading ecosystem. Imagine a bustling traditional marketplace or an auction house digitized for speed and efficiency. This digital transformation allows for a more dynamic and accessible trading environment. It can handle thousands of transactions per second and manage countless digital assets simultaneously. This capability is essential for the fast-paced world of cryptocurrency trading. Every cryptocurrency exchange utilizes order books, indispensable for every trading pair offered. They are the backbone of the trading process, ensuring liquidity and price discovery. Understanding these order books is crucial for anyone involved in crypto. It provides insights into market sentiment and potential price movements. It helps you understand how prices are formed and empowers you to make more informed decisions. Mastering the order book can give you a significant edge in the competitive world of cryptocurrency trading. The two sides of the trade: bids and asks explained. An order book presents two sides, the bid side and the ask side. The bid side represents buy orders, showing the price a buyer is willing to pay and the quantity they seek. These bids are expressions of demand, indicating how much interest there is in purchasing at various price levels. The ask side represents sell orders, listing the price a seller is willing to accept and the quantity they offer. These asks are expressions of supply, showing how much of the asset is available for sale. Exchanges typically display bids on the left, often colored green, and asks on the right, often colored red. This visual distinction aids quick market interpretation, making it easier for traders to make informed decisions. Each entry on the bid or ask side provides key details: price level, quantity, and sometimes cumulative quantity. These lists are dynamic, with new orders constantly added, filled, or canceled, reflecting the ever-changing nature of the market. The book is a living reflection of market activity, capturing the real-time dynamics of trading. Finding the price: how order books determine crypto values. The order book plays a crucial role in price discovery, the process by which market prices are determined. It acts as a real-time ledger. Buyers aim to purchase at the lowest prices while sellers aim for the highest. This dynamic interaction. This tension is visible in the order book and is fundamental to price setting. Two figures are key: the highest bid price and the lowest ask price. These figures. The difference between them is the spread, indicating market liquidity. A narrow spread. A trade occurs when a bid and ask price match, or when a new order crosses the spread. This crossing. The last traded price is recorded by the exchange, but the true market price is shown by the highest bid and lowest ask. This real-time data. The order book reveals a range of prices and the depth of supply and demand at each level, providing a comprehensive view of market sentiment. Section 4. The Trader's Crystal Ball. Why understanding order books is crucial. Order books are more than lists of numbers. They offer insights into market conditions. They reveal the forces of supply and demand driving price movements. This information allows traders to make strategic decisions and anticipate trends. Observing the order book helps gauge market sentiment. More buy orders at higher prices suggest bullish sentiment, while sell orders at lower prices indicate bearish pressure. Order books are essential for assessing market liquidity. A book with many orders near the current price indicates high liquidity, allowing large trades with minimal impact. Traders use order books to identify support and resistance levels, aiding in planning entry and exit points. Section 5. Reading the lines, a practical guide to order books. Learning to read an order book is crucial for any crypto participant. Key columns include price, amount, and sometimes cumulative amount. Bids and asks are displayed on opposite sides, a standard layout across exchanges. Consider an example. A bid at $60,000 for 0.75 BTC, and an ask at $60,010 for 0.50 BTC. The top of the book, with the highest bid and lowest ask, is the focus. The bid-ask spread indicates market liquidity. Order book depth shows volume at various price levels. Large orders at specific points, known as buy-or-sell walls, suggest support or resistance. Be cautious of spoofing, where orders are placed without intent to execute. Section 6. Navigating the depths. Tips for beginners using order books. Beginners should approach order books with patience, not basing decisions solely on them. Start by observing the order book for a chosen asset, noting changes during different market phases. Identify patterns like volume increases at certain times or spread changes before announcements. Combine order book analysis with other market studies like price charts and news. A holistic approach leads to better decision-making. Be aware of market manipulation tactics like spoofing and wash trading. Approach order book signals with skepticism and practice sound risk management. Never invest more than you can afford to lose.